business taxes. Does the thought of them make your palms sweat and your stomach drop? Look, I get it. As a small business owner, I've been there. When I first started, I had no clue about tax compliance. I missed deadlines, paid penalties, and lost sleep wondering if I was doing everything wrong. But it doesn't have to be that way. Over time, I figured it out with helpful business resources from brands like Intuit QuickBooks that made small business taxes both easier to understand and manage. Now, I'm sharing 5 simple steps to help you stay compliant, avoid costly surprises, and make tax season feel manageable. So, grab your coffee and let's dive in. Step 1 starts with getting your foundation in place, and that means gathering your records for business conducted during the tax year. You literally cannot file accurately if your paperwork isn't in order. Here's what you need. Income records, so invoices, sales reports, anything showing money coming in. Bank and credit card statements, payroll reports if you have employees, and don't forget mileage logs if you drive for business. I know, it might seem like a lot at first, but keeping good records isn't just for tax time. It helps you really understand how your business is doing. Step 2 is an important one. You need to understand which taxes actually apply to your business. Every business structure has different responsibilities. Here are the most common structures: sole proprietor, partnership, corporation, and limited liability company, or LLC. First up, income tax. You'll pay federal income tax on your business profits and possibly state income tax depending on where you're located. If you're a sole proprietor or partner, you're responsible for self-employment tax, which covers Social Security and Medicare, the same taxes that employees and employers pay under FICA. The difference is when you're self-employed, you pay both sides yourself, about 15.3% of your net earnings. If you have employees, your responsibilities expand. You still pay self-employment tax on your own income, but you're also responsible for employment tax on behalf of your team. That includes Social Security and Medicare taxes. These are withheld from each employee's paycheck and matched by you. Federal unemployment tax, which is paid by you, the employer, and state unemployment tax, which is also paid by you in most states. And don't forget about sales tax. If you sell products or certain services, you'll likely need to collect tax from your customers and remit it to your state. Keep in mind that some of these taxes are due more than once a year. For example, quarterly deposits for unemployment tax and periodic remittance of sales tax are common. And finally, there might be property or excise taxes depending on what your business owns or sells. The key here is knowing which taxes apply to you specifically, because that determines everything else we're going to talk about. Now let's get into step 3, the forms. The IRS form you need depends entirely on your business structure. If you're a sole proprietor, maybe you're running an online shop or a freelance business, you'll file Schedule C and attach it to your personal tax return. Partnerships file Form 1065, and each partner gets a Schedule K1 showing their share of the profits and losses. S corporations use Form 1120S. It's a separate return from your personal taxes. C corporations file Form 1120. This is common for larger businesses or ones planning to grow quickly. Now, LLCs are interesting because you can choose how you want to be taxed. Single-member LLCs usually file like a sole proprietor with that Schedule C. Multi-member LLCs often file as a partnership using Form 1065. Or you can elect to be taxed as a C or S Corp by filing additional forms. So here's the bottom line. Accuracy is absolutely essential. Read the form instructions, use reliable accounting software like QuickBooks, double check your numbers, and consult with a tax professional who can better advise you on your specific tax situation. Trust me, the cost of getting help is way less than the cost of getting it wrong. Staying tax compliant starts with meeting your deadlines, and that's what Step 4 covers. You may want to screenshot this because these are the key dates you need to know. Tax deadlines may shift depending on whether the tax date falls on a weekend, so make sure to confirm on the IRS website or read the tax dates article linked in the description below to get the specific dates for the tax year. January 15th. This is when your final quarterly estimated tax payment is due for income earned in the last part of the previous year. If you're self-employed, own a small business, or receive other income not subject to withholding, these estimated payments cover income tax and self-employment tax, which is Social Security and Medicare. January 31st means it's time to send W-2s to employees and 1099s to contractors. March 15th is when partnerships, multi-member LLCs, and S Corps need to file their returns. At the end of March, file any remaining 1099s electronically with the IRS. And then comes April 15th. That's tax day for sole proprietors, single-member LLCs, and C Corps. It's also when your first estimated payment for the new year is due. But if April 15th falls on a weekend or a holiday, the deadline moves to the next business day. Once April's out of the way, you've got 2 more days to remember: June 15th and September 15th for your remaining quarterly tax payments. Those are the big filing dates, but if you have employees, there's one more thing to keep in mind: Payroll taxes. Payroll taxes are the federal and state taxes you withhold from employees' paychecks, things like Social Security, Medicare, and unemployment. You'll send those to the IRS in your state on a regular schedule, usually monthly for most small businesses. If you need a little extra time, you can file an extension, but keep in mind, it gives you more time to file, not more time to pay. Want to make it all a little easier? Step 5 is building smart habits that keep you organized year-round. Keep your business and personal finances completely separate. Log expenses as they happen instead of trying to remember everything later. Make those quarterly estimated payments to avoid underpayment penalties. Understand and keep track of your tax deductions, and keep your records for at least 7 years. I know it sounds like a lot, but trust me, if the IRS comes knocking, you'll be glad you did. And that's it. When you stay on top of your financial records, know your key dates and forms, and use an accounting system like QuickBooks that keeps it all organized, tax season just fits into the routine. Now, if this helped you out, hit that like button and subscribe for more small business tips. You've worked hard to build your business. Make sure you're setting it up for success. You've got this.